Hello, chart watchers, and welcome to this Wednesday, March 13th, 2019 Market Watchers Live Show with your hosts, Tom Bowley and Aaron Swinlin. For those of you joining us for the first time today, welcome to the show. And for our regulars, welcome back. Let's take a look at what's going on in the market today. We got the Dow Jones Industrial Average up 165 points. The S&P 500 up 24. Pay attention to the numbers. Back in October, that reaction high that we saw in the S&P was at 2816.94. And that recent open, or actually the recent high we had in early March, was at 2816.88. So earlier we did clear both of those levels. It's going to be interesting to see where the S&P closes later today. NASDAQ breaking out up 69 points above 7660 now. And the Russell 2000 small caps up another 11 points and back near its 20-day moving average, 1561. 10-year Treasury yield continues to be an issue. It is up about 1 basis point today at 2.62%. Volatility index moving back down toward its recent lows. It's under 14 again, 13.55. As I've mentioned on many shows in the past, we've not had a VIX reading below 16 in the previous two bear markets. So those who are following this and thinking bear market, the volatility index is not supporting that. Healthcare having a very strong day for the second day in a row. Really nice action today, getting back up through its 20-day moving average. You can see that the XLK also having a strong day, breaking out. And industrials, which have been under a little bit of pressure the last couple of days as a result of Boeing, showing some relative strength today. Healthcare providers, one of the top performing indices or industries today, having a really nice day. And you can also see railroads leading the industrials and software stocks breaking out to lead technology higher. All right, Aaron, it's Wednesday, it's hump day, and, we haven't talked hockey in a while. Is there a reason why?
Probably. I don't know. The Ducks have had a really rough season. It's just been really bad, but now we get to play spoiler. And the Kings are still in last place, and that's really the important part, that the Ducks are above them. So that's, as long as we're beating the Kings, I don't care that we're in the basement. So...
All right. Well, that's cool. All right. I got to admit it. I saw the Caps were on a winning streak, so I had to bring up hockey today.
Of course. No, they're having another good year.
Yeah, they are having another good year. They're tops in the conference. At least last time I checked, they were tops in the conference. So getting ready for the playoffs. But I got to tell you, Tampa Bay, really strong. I mean, they are top to bottom, one of the best teams I've seen in hockey in several years. So we'll see whether or not that translates.
Ridiculous. Yeah. They're if they don't win the Stanley Cup, honestly, I'll be really surprised.
Yeah, they probably were close to this last year, but they did struggle in the playoffs, ended up losing. But I think their team's even better this year. But anyway, enough of the hockey talk. We got a special guest on today, Linda Raschke. Linda, you mentioned before the show you're down in Florida. You a hockey fan?
Is my mic live?
It is.
Aha. Well, I am down in Florida now, so we don't talk hockey down in the tropics, but I'm half the time up in Chicago, so absolutely the Blackhawks go.
Oh, wow. Okay, so you're transplanted from Chicago. I have to say, here in South Carolina, I think over the last couple of months, we could have had an outdoor hockey team, and I think our ice would be fine.
Oh, dear.
It's been so cold, but I'm not. I know Aaron's had it tough out there on a relative basis in terms of the temperature as well.
On a relative basis, I love that.
Yeah, well, I mean, you're complaining because it doesn't hit 70. I'm sorry, but there's a lot of violins playing right now in Canada.
Oh, I'm sure.
For your cold temperatures.
I chose to live here. I live here. I have expectations.
This is true. Well, Linda, it is a pleasure to have you. I know you've got some great information to share with our viewers later in the show, and we're going to bring you back here in about 15 minutes, if that's okay.
Absolutely.
All right. You want to stick around because Linda's got a great presentation for everyone. And Erin, to get this party started, I'm going to let you take it away.
All right. Our upcoming schedule. So tomorrow I will be doing my workshop, and it is going to be on decision point analysis of the Dow 30. We're going to go through every single one of those and look at signals and make some conclusions. What's hot, what's not. Mary Ellen will be here with us Friday. Tom, you got a workshop next Tuesday. And David Keller, we had him last Tuesday, well, yesterday, and we get to have him back again next week. So it'll be a great week for us. You'll definitely want to tune in then. But today, what are we up to? Well, we're going to start off, of course, with our news and headlines. But after that, Linda's going to give us her presentation. And then 10 and 10, the very first symbol is going to be Gilead Sciences. And then we're going to finish off the program with Anatomy of a Trade. Both of us are actually trading a little bit here. So we'll show you what some of our trades are looking like currently. And with that, go ahead and start it off. Technical news and headlines.
All right, let's go over some of the economic reports out this morning. January durable goods, as you can see, better than expected, rose 0.4% versus the anticipated 0.6% decline. When we strip out the transports, numbers weren't quite so good. There was actually a drop of 0.1% versus the anticipated rise of 0.1%. Durable goods tends to be extremely volatile, though, so it's probably better to look at this from a 3-4 month moving average kind of a thing. February PPI came in lighter than expected. Certainly inflation at both the consumer level and the producer level, not really a problem at this point. You can see both of those readings, the PPI and the core PPI, coming in below expectations. And then finally at 10 o'clock, a really good construction spending number for January, rose 1.3% versus the 0.3% expected, showing that things really picked up in the construction area after a dismal December. As far as the reaction in the bond market, you can see the 10-year Treasury yield yesterday broke down below all of these recent lows. So we moved to about a 8 or 9 week, maybe even 10-week low, dating back to the early January low that we saw, 2.55%. Certainly we're setting up maybe for another test of that level. I'm not a big fan of seeing the yields continue to drop while the stock market is moving higher because the bond market, again, does show us that it is thinking maybe economic strength is not what the Fed makes it out to be based on how the 10-year Treasury yield has been trading. As far as earnings go, most of these are going to be smaller companies, but we do have Cohu, C-O-H-U, you can see beat on the top line. ZAG, Z-A-G-G, also a beat. Every Holdings came in just slightly lower, and then Express Inc. this morning reported just slightly, pretty good beat in terms of their bottom line. So let's take a look and see what these charts are looking like on these stocks. First, we'll take a look at Cohu. All right, you can see that Cohu is trading down. It gapped down earlier today. This is not a huge volume stock, but volume is definitely heavy today on a relative basis. PPOs turned negative on this breakdown, not looking very good. If I pull up my relative chart on Cohu, you'll see that it has been underperforming its peer group, which is in the semiconductors. So semiconductors have been really good and breaking out above recent highs. And yet when we look at Cohu, we're nowhere near the highs we saw just a couple of weeks back. So what does that translate into? A very weak relative performer in the semiconductor space. So earnings, not what folks wanted, and definitely trading down. And of course, the market on a relative basis has been telling us to beware Cohu heading into its earnings anyway. As we go a little bit further, let me take a look at the next one, which will be ZAG, Z-A-G-G. We'll also pull this up on a relative chart basis. Another one not performing well today. Very big volume, already 800,000 shares today, which is heavy for ZAG. And you can see the stock down more than 11% today, falling beneath recent lows. And just like I was showing on Cohu, this is another one that I think was giving us some clues. When you look at a relative chart of ZAG versus the commodity chemical group, you can see that the, or I guess it's specialty chemicals, you can see that the relative strength was very, very poor even before the earnings report came out. And so this is not good news for the stock. A little surprised. They did beat on their top line, beat on the bottom line, but the stock has traded down quite a bit. I did not see their guidance, so perhaps they guided a bit lower. EVRI, this company beat on their top line by about $5 million, $119 million versus $114 million. They missed by a penny on their bottom line, but this is a stock that is trying to make a breakout. It is breaking out above recent lows, or recent highs, but you do have the September highs just above 950 that we're going to have to negotiate. The group, though, is making a breakout, which is a good sign, and you can see the relative strength of every breaking out versus its peers. So pretty good action there. The last earnings report I wanted to show you is EXPR. Express. This almost, well, we'll see how it finishes today, but this is looking like an exhaustion gap. The stock was at over $11.50 back in September, traded all the way down to $5 before this report. They did miss on their top line. They beat on their bottom line by 4 cents, 19 versus 15 cents. The miss on their top line was really only about $1 million on $630 million estimate, so not a lot there. They did lower expectations in the upcoming quarter, but based on the way this candle is looking, I'm thinking maybe a lot of bad news is already priced in. I would just offer up one bit of caution, though. It looked like it was doing the same thing back in November. Big decline, hollow candle, and you can see we did continue moving lower. So while these hollow candles on big volume can be exhaustion gaps to the downside, and then, of course, see a reversal off of it, not always. Nothing in technical analysis is a guarantee, so keep that in mind. All right, the last thing I wanted to show you, this comes from my blog article this morning. I just wanted to point this out before we get into our upgrades and downgrades. In the current outlook area, I did put in here 5 industry groups that have been looking pretty good relative to the S&P 500. Those of you who are not familiar with RRG charts might look at this and think maybe there was a third grader that was scribbling. But these are really great-looking charts that can help you visualize what's taking place in the market. You should be looking at this center point right here, this connection of the X and Y axis, as the relative strength point versus the benchmark index. So if you're above it, then you have stronger momentum than the benchmark index. If you're to the right of it, you have stronger relative strength. So really what you're looking for is this leading quadrant over here. And as you can see, many of these groups, and I'm going to scroll back and let you kind of watch. Oops, I can't do it. There we go. Is it going to let me? Nope. All right. Well, take my word for it. As we move this through 2019, these groups were improving, going into lagging or into the leading, and then starting to move toward the lagging, into the weakening. And I wanted just to mention first the internet stocks, because over the last 20 days here, this tail length gives you 20 days. It's telling you how the internet group has been acting relative to the benchmark S&P 500. It started in the leading, went all the way through the weakening, into the lagging, back into the improving, and now back into leading. And you look at that and you say, well, you know, is that a good area? Well, anytime you're in the leading and you work your way back into the leading, that generally is going to be a pretty good sign. I want to show you the chart that I had in here that shows you, this is the sharp chart that will show you the internet stocks and how it was doing, how this group was doing relative to the S&P 500. Clearly, we're in an uptrend. So when you go into that weakening and into the lagging, what it really sets up and I put these color-coded dotted lines in here, green, yellow, red, blue, back to green, to coincide with what was going on this chart. Green leading, yellow weakening, red lagging, blue improving, back into green leading. So when you're looking at this sharp chart, you can kind of see what the stock or what this index is doing relative to the S&P 500 down here. But on an absolute basis, when it's telling us that the stock is in this lagging and then into the improving, I want you to take a look at essentially where we were right in here. All we did is we went down and had a 20-day test, tested price support. And so what the RRG chart tells us, it gives us indications of some of the things that we may want to explore further. And so when you see a group like internet that had been leading for a while, go back down into weakening, maybe even dip into lagging, and then start coming back up, that's a group that you want to take a look at, because this is a group that's been outperforming the S&P, pulls back, nothing goes up forever. So you need these pullbacks, these consolidation periods. And as you can see on this chart, that was a tremendous opportunity on internet stocks. We've run from 1,600 up to 1,720 on yesterday's high, and that's been over the course of less than 3 weeks. So just wanted to point it out. Look at the RRG, but then you also can look at a sharp chart and get a sense of what's going on in terms of relative strength and absolute strength, and how that coincides with what you're seeing on an RRG chart. Okay, Erin, upgrades, downgrades, what do you have for today?
All right, let's take a look. It was another one of those days where the list for upgrades was a lot smaller than the downgrades. So I'm going to look at two of the upgrades. First of all is Broadridge Financial Solutions. They were upgraded today from a perform to an outperform. I thought the chart is, this isn't what I would call a tasty trade at all. It's been traveling sideways for quite some time, especially given it's in the software space. And I know we've seen some really good improvement. It's some great improvement there, and we're not seeing it here. It's just been moving mostly sideways. I did want to point out we are looking at testing overhead resistance currently, and I set the resistance line up. And one of the things I talk about all the time is that, you can take a short term or an intermediate term low or top, and it's very interesting how it will line up back into history as an area of either support or resistance. And currently we're looking at it sitting about ready to hit resistance. It is upgraded. I did get a PMO buy signal, but honestly, this hasn't been the best mover to begin with. So, great that there's an upgrade, but it certainly doesn't look like something I'd be particularly interested in. All right, from the financial space, Comerica today was upgraded, and you can see from a hold to a buy. One of the things the reason I picked this chart was that it really, in my opinion, has pretty much a textbook reverse head and shoulders on it. And I would say you've got the sloping neckline there. It's moving lower. And at this point, we got the breakout and we did not get the fulfillment of the pattern, which of course, if you get the breakout, you're supposed to expect the length of the pattern to the upside from that neckline. And it failed. We didn't get it, but we're now sitting on that neckline as support. Until that's broken, I think that the pattern could still be considered valid, but look at this. We have a PMO sell signal. OBV volume has just been really ugly right now. Scooter value even is near the bottom. So, maybe you could add this to the watch list, but it is downgraded. So, and the fact it failed on that reverse head and shoulders would give me some pause. All right, gold, GOLD, and actually this is the one that was upgraded. The other one, CMA, was actually downgraded today. Barrick Gold, and I have to say I was in this one. That was one of the ones I jumped into after we started to move to the upside, and I was worried about bear market situation. And it's been moving mostly sideways. There wasn't anything too exciting going on, so I did end up selling it. I'll talk about that in Anatomy of a Trade. But you can see right now we do have that PMO buy signal. It's on the upgrade. But again, it's been in a trading range mostly since October. And so, again, I would like to go with something that's in a rising trend in the intermediate term, just based on the way I buy my trades intermediate term. So this one I did end up getting rid of when it just wasn't doing very much for me, and I felt a little more comfortable. So let's see, next one we have up, these are downgrades. New Star Energy was downgraded today, and it went from a neutral to an underweight. Now I see that it's sitting in a rising trend at this point, a rising trend channel. And, the thing I have a problem with is that my PMO has been rather flat. We haven't seen much momentum building on this move to the upside. And now if you look here in the very short term, I think we have some serious problems in that my PMO did turn down. We got a top below the signal line, and I don't like to see that. That suggests to me that we should at least look for a test of the bottom of this rising trend channel. Let's see, Roku. This one was actually downgraded by two agencies, one from a hold to a sell and the other from an outperform to a neutral. I don't like this chart. I have to agree with the downgrade. In the short term, we've got a problem, an overbought PMO that's topped and ready to give us a sell signal. We were in a rising trend here for Roku, and today, and I don't know if it's really based on the downgrade or not, but it's down over 8%. But it's testing an area of support that I would say you could even move it a little lower and test support at that short-term low back there at about $63. But this one lined up, like I said, it's interesting how you will set these up, and they do tend to line up with previous support or resistance. And in this case, you can see the previous resistance that was formed back here, and now it's support. 20-day EMA is currently holding. Scooter value is still pretty good, and we are seeing that rise on the OBV. Of course, I think today that OBV, if we're going to continue lower like this, which I suspect we will, the volume for the day will be subtracted, and we might see a drop below these previous lows on the OBV. And finally, Shell Midstream Partners was downgraded today from an overweight to a neutral. And honestly, I like this chart, even on the downgrade. We got a breakout from a declining trend, and it's holding even with this 0.5% to the downside move. But look at this, nice PMO buy signal, plenty of room for it to move without getting overbought. You had that 20 that has held, and now it looks like we might have the 50-day EMA holding as support. So I think on the downgrade, Shell Midstream might be something to consider, but it is in that energy space, so it hasn't been performing that well. Watch for this breakout, though. I think we could see a move up to that 2050 level, so something to consider. And that's all I have for the upgrades and downgrades. Here's the listing for you. Just a few others I thought were a little bit interesting here. ADT was downgraded today. HTGC was downgraded by 3 different agencies. And you can see there were some other upgrades that were of interest. I know one of your favorite symbols, Momo, Tom, they were upgraded today. All right, time to introduce and bring in Linda. And Linda, I have to confess something. A couple of years ago, when I did a ChartCon presentation to a big audience, I had finished my presentation and I said, I hope you enjoyed my presentation. And then I said, and if you didn't, remember my name is Linda Raschke. So,
oh my gosh.
And I did get quite a laugh from that. So, but I have to throw my dad under the bus because it was his idea. I did it. So let's hear what you've got to say today. I'm very excited to have you here.
Thank you, Erin. It's an honor to be on this stage. Let me ask you, can you see my chart presentation here?
Not just yet. Make sure there it is. You're good.
Okay. Well, this is my first time speaking for stockcharts.com, so thank you again to Erin and Tom for having me on. A number of my colleagues I can see have presented on here and presented elaborate technical presentations. I'm going to present something a little bit simpler in format for my first showing here. So ignore this glamour shot of me, of my head, and let's just make sure we can get these. Okay, so first I have to shamelessly promote my book that I just wrote because it took me so darn long to write it, and I did send Erin a copy and she's halfway through, but I just have to shamelessly introduce it because it was such a labor of love and work, and basically summing up how I managed to be on the wrong side of so many outliers in my trading career. So therefore, anything I present thereafter, you can take with a grain of salt, okay? But the thing is that bad events happen to all of us in the marketplaces because there is that element of risk. And the main challenge and key to surviving is always being able to make back those losses and stay in the game. So there's a lot of stories about that in the book. Okay, onward and tally ho. I thought I would show some of the market internals that I look at night. My initial homework for glancing over this probably lasts no more than 5 minutes, and I do have to again shamelessly promote stock charts because I love their sentiment readings and the put call ratios. I get all that data off of there. This is a routine that I've done since 1981 and was taught by my first mentor when I was on the trading floors. It doesn't take long, but it's that fact of updating your analysis one day at a time. Very important for me. And so I wanted you to see that it's not overly complicated and just the essence of what I look at. The first thing, this was, when I put this together, it just happened to be a fabulous buy signal on the S&P and the market indices. I simply use a 9-period RSI and a 2-period RSI, and you can see the 2-period RSI just highlights very overbought or oversold conditions. And it's, for me, the shape of the curves that's so important. And honestly, it doesn't matter if you look at a stochastic or a momentum reading, have some tool that you rely on consistently. Now, as an aside, when I first started trading on the floor, I'm sure many of you remember that TV show Wall Street Week. And I remember watching the elves with many other people, the Wall Street elves. And do you realize that for the first 10 years of the elves signal, it had a 92% win rate on its timing signals, 92% over a 10-year period. So after that, I adopted the philosophy of why pay attention to fundamentals and all these elaborate things when it's just a matter of a very simple timing indicator that was based off of, this is what the ELV signal was based off of, momentum, sentiment, and monetary conditions. So those are my three primary variables that I put weight into when making decisions for longer term timing. And then on top of that, I have an element of structure, which I will show you as well. So this here is just simply a momentum type of measurement. And again, I like the stockcharts.com site for the sentiment readings, such as put-call ratios and so forth. This is a 5 and a 10 period simple moving average of New York Stock Exchange breadth. Very simple oscillator, and goodness knows there's a million out there, variations on a theme. McClellan oscillator has been a wonderful tool for many decades. This is very simple, and it just gives me an idea of the overbought, oversold type of readings. And you can see that move up off January actually could be classified as a breadth thrust, another type of indicator or signal, if you will, within the context of extremely strong market breadth. So as is the case with most momentum indicators, they can indicate both overbought and oversold readings, as well as continuation patterns. So a breadth thrust signal off that lows indicated that we had good upside momentum and therefore continuation. And then you can see the deterioration, sort of the 3 triple tops, and we corrected that recently and hit towards the lower end of the range. So it's a difficult thing for me to quantify in terms of an absolute reading. I think a lot of technical analysis is using our own judgment and experience and our ability to put things into context. So this was just 2-3 days ago. And then on top of that, I always like to look at the hourly structure. And this red, green, red is a way of highlighting that structure. And it's an average true range function I keep on all my charts that was originally put out there by Wells Wilder with his volatility stop and reverse signal. So when price moves down by a certain ATR, it turns the bars red and vice versa. It's not a signal in and of itself. It's just a pattern recognition. And here it's easy to see that we still have that ABC down on the red, green, red structure within the context of that hourly charts. So it's still an uptrend, and I will show you what would actually look like if we were to do a trend reversal. Another thing that I like to look at is the closing tick reading. I use a 5-period moving average of the closing ticks. And I have used this probably for 3 decades. And I'll show you something else interesting as well. So at the bottom there, you can see the red line in the middle of the chart that is the 5-period moving average of the closing ticks. And what you will notice is that the shape of that is nearly identical to a breadth type of oscillator. So therefore, the ticks and the breadth readings are very highly correlated. Just good to keep in mind. I use it again for overbought, oversold within a context, looking for oversold readings in an uptrend. And then again, it also has that element of the breadth thrust. Now those bands you see surrounding the ticks, the blue band at the top and the red band at the bottom, is a little bit of a secret of mine for longer term timing. And simply put, the top blue line is a moving average of the tick highs, and the red line is a moving average of the tick lows. And if I had to use just one of those, I would just pick the red bottom line and use it as an oscillator. And here is the secret. When those bands squish together, so that there's a narrow range that starts to indicate a contraction in volatility and therefore a bit of complacency, and you will usually see those bands start to narrow near market tops. And then, of course, at market bottoms, there's a lot of fear and extreme readings in the ticks, both to the upside and the downside. And when those bands get very far apart, that to me represents an intermediate term buying opportunity. So you can see it's a visual tool. It's difficult to quantify to the day, but it tells you the overall environment. And then you might want to drill down to shorter term triggers to look to initiate trades with a better risk reward for your initial entry. Lastly, I do look at the NASDAQ internals as well. And I mention this because the slides I just showed you before were on the NYSE breadth. And I actually like to treat them differently, the NASDAQ breadth as well as the NASDAQ trend. Now, many, many years ago, the trend was one of my key indicators for intermediate term timing, such as a 10-day overbought or oversold type of reading. I've pretty much discarded the NYSE trend because it's too distorted with a couple very large volume stocks. For example, Bank of America really could cause some distortions in that trend. However, I still find value in this NASDAQ trend, and you can see that periods where it has spiked up high have been close to buying opportunities, right? I don't use it as much for sell signals. I like to look for the buying opportunities. And conversely, you can see the 10-day moving average of the breadth on that chart above it looks, again, very inversely correlated at times and other times not. But for overall timing, it's a good tool to help frame out context. Lastly, I do believe in volume. And for me, the volume component comes in on the daily basis. So I like to look at the first 30-minute range of the New York Stock Exchange volume. And you might say, well, gosh, that's kind of odd because the majority of shares don't even trade on the New York Stock Exchange like they used to. I believe the figure is something along the lines of 15% of the activity tends to be on the NYSE. I may be mistaken, but it's not anywhere what it was 20 years ago. But I still find that it confirms the overall environment. And if I see a 30-minute first opening bar that's much greater than the previous 3 days, there's pretty good odds that we're going to have a trend day or a day of range expansion or pushing up to a new level. And conversely, if it's a very light reading for the first 30 minutes, again, lower perhaps than the previous couple days, pretty good chance that we're going to just have a rotation day. And interestingly enough, this seems to hold true for the whole tone of the market in terms of the financials, the bonds, and the currencies. Now, it doesn't mean you can't have a fabulous trend in something like wheat or the crude oil or a commodity market, but it really does set the tone for the trading day. So I want to be much more careful about doing breakout trades if we're in a lighter volume type of environment. And I'll feel very good about pushing or even adding to breakout trades or momentum plays when I see that increase in volume. And again, I just like to see it for the overall NYSE. So pretty simple right there in a nutshell. Those are my basic indicators. I like the put call readings that I get off the stock charts, and I do look at the sentiment readings on the weekend. And other than that, I try to not look at too many other indicators because, you know, the old saying, the best indicator of all is price. And I'm very price oriented. So I mentioned earlier that red, green, red rule for the swings. And I like to use a pure price-based structure, such as the swings up and down, to give context, in particular, the daily and the weekly charts. So here you can see the wave structure, and that top left zigzag is in a steady uptrend, zigzagging up with higher highs and higher lows, and then it makes an ABC down. At that point, for my computer, and I always frame it in terms of what the computer would say, because, you know, we're so subject to our own cognitive biases, we can easily see what we want to see. So on that top left chart, we're still in an uptrend with an ABC down. And same thing on the far right. I'm sure you've experienced this many times where the market simply makes a liquidation flush and it may take out the previous low. However, it's still in an uptrend according to pure swing trading rules. And we can see in the middle charts there a possible resolution to this, a corrective ABC, and then on to make higher highs, as well as that liquidation flush down, and then that still sets up a push for higher highs. So that is one potential outcome from that interesting structure at the top. The second potential outcome is what we would call a pure trend reversal down, where you have lower highs and lower lows. In other words, think of making that ABC down and then taking out that swing low. And you'll see very often it almost will look like a head and shoulders type of topping formation. So those are my rules that I can quantify swings and model them and look at the risk reward component to them. So anytime you do see this ABC type of consolidation, it's what I call a quote power buy, or it can then lead to a total failure. And these are some of the structural points that lead to bigger wins. And that's what we're all interested in trading the market. It's not just having a win, but I want to see where can I maximize my points made or dollars earned per holding time. And so very often out of this type of structure, we can get a bigger swing up or down. So there's that component there with the basic swing structure. And then I'm very much an oscillator person. I confess, probably since 1981, when I began updating these security market research charts by hand, it was based off the oscillator that I'm going to show you. That is the blue line in the middle of the chart there. It's the difference between a 3 and a 10 period simple moving average, and it has a 16 period moving average of that. And you can see I always like to have 2 time frames concurrently, here a weekly and a daily, when I'm doing my stock chart analysis. So what I did is I categorized about 9 basic combinations of weekly and daily chart formations that tend to lead to these bigger wins. And how do we quantify what a bigger win is? Of course, it's always nice when you see that expansion in range and a large standard deviation move. But what I like to look at is something called persistency of trend. And on that far right chart, on the bottom in those squares, you'll see a histogram. That histogram is simply the difference between a 5 and 1 period simple moving average. So those boxes show cases where the price stayed above a 5 period simple moving average for more than 7 bars. And that's my whole game, is trying to find those spots from a structural standpoint where I can capture possibly a bigger win like that, and then see what the market gives you in terms of price movement. So in this particular case, on Home Depot, on the weekly chart, you can see there was a classic bull flag consolidation on the weekly chart. In that book that I wrote many, many years ago, we jokingly called this the Holy Grail trade because the ADX rose above 30, and then we consolidated to that moving average. And then on the far right, you'll see a much more complex chart formation. But what I want you to notice is the pattern in the swings, that ABC down on that red, green, red rule, where we have that power buy type of structure. It often can be a little bear trap if it's to the upside, or vice versa, a bull trap. And so that structure, that power buy, that ABC within the context of this powerful weekly chart formation, led to the first extended run, that big move up. And then you can see as well, we had another pullback. And remember what I said, how powerful it is if the market takes out the high of an ABC type of correction. So that second arrow that I have to the right, okay, was the high that we then took out, and that led to that really major move to the upside. So this is how I like to concentrate my energies, on just looking at the pure swings, the pure momentum readings, and the pure price structures. My idea of a perfect trade would be where I can have the slope of that 310 oscillator, the slope of the fast line and the slow line turning up in my favor. I love that opportunity to get that positive slope turning up. And then I call that the wind behind my back. So that's what I want to find. And then as a trigger, because I just showed you quite a lot of complicated structures there, but a very simple tool for a breakout or one of the structures that leads to this extended run is simply the 2-period rate of change makes new 30-bar highs. And you've also got the gap there, which is another wonderful tool. And it's in the context of this weekly potential very bullish chart formation. So at the far left, you can see we actually made new lows in the 2-period rate of change. I would not put any credence in that, because the structure on the daily and the weekly chart was not supportive of a downside move. So I'm not using this as an indicator in and of itself. I'm using it as a trigger or a confirmation. Aha, you say, so you know all the tricks. Well, what about where we are now? And by the way, I can show you structures that were bearish at the same time that we have buy signals. We can have sell signals. I believe there was an excellent one on U.S. steel to the downside. At the same time, many stocks were making upside moves. So it is independent of that overall timing that I just showed you with the indicators. But of course, that is very helpful in and of itself. So
Hey,
I
Linda.
just happened to come across this today. I'll just show you one, and then I know they're going to kick me off.
Well, hey,
It
Linda,
was
we
it
actually
was
have a
NVIDIA.
couple. We have a
Yes.
couple questions. If I could just interrupt you for a minute.
Oh, absolutely. Please.
Okay, the first one, and you've gone through a lot of these charts, and I know a lot of viewers are looking at them, wondering how they can set these charts up for themselves. Do you have, by chance, a how-to in your book on how you set these charts up?
I don't, because for two reasons. First of all, the book is not a pure technical manual. It's much more wisdom and process and my philosophy, and there are some technical things in there as well. Another factor is that every charting software is different, but this is a very simple example. So if anybody is wondering how to create that 310 moving average oscillator, you can simply go to my website, lindaraschke.net, and drop me a line, and I'm happy to email you back as well as giving you a chart example. The 2-period rate of change is pretty self-explanatory. You can use momentum or rate of change on a software platform. And the oscillator is a difference between a 1 and 5 period moving average at the bottom. And I simply set it up as a histogram, so it's really easy to see how many days we have on one side of that 5 SMA, which, by the way, is plotted with that blue line on the candlestick chart. So it's just a little crutch, a little tool, so that you don't have to go counting the bars on the actual chart. But please feel free to email me, lindaraschke.net, off of my website, because I sit here at lunch and I eat my can of tuna fish and I don't leave, and that's when I answer emails. So happy to do that for you. Let me just show you one last example here that was setting up today. And the reason this was so interesting was because this chart was very similar to that BR that Erin was showing you earlier, which she said this is showing up as something interesting or unusual. And what I wanted to show you here with NVIDIA is we have not only an interesting daily chart formation with a push right to the start of a gap area, always of interest. And you can see that on the far right of the chart, that slow and fast line are just poised to turn up. But also on the weekly chart, you have a positive slope to the oscillator there. And there is potential for that fast line on the weekly chart to also turn up. So you've got huge risk reward here in terms of the potential. Now let's go down and see if we had a trigger. And you can see right where I have those arrows that 2 days ago, that actually was a new 30-bar high on that 2-period rate of change. So definitely a confirmation that you have the upside momentum to perhaps carry us away. It's not necessarily that it's making a new high, it's the new momentum that is important. And I would say that this is a methodology that can yield a very high percentage of wins for your trades, and a very high percentage of trades that catch on fire and give you that extended run on one side of the 5 SMA, or simple moving average. And that's what this game is about. If we make 100 trades, we want a certain number of them, of course, to catch on fire and get legs, as we say. And we know, of course, many can fail.
Hey, Linda.
Yes.
On this chart here of NVIDIA, so if you like this chart, let's say that, based on what you're looking at here, it's giving you a buy signal and you jump in. At what point, using these indicators that you have on the screen, at what point, if it reverses, would you say, hey, this one simply didn't work? Is it the price breakout that doesn't hold? Is it one of those averages that you're looking at turning down? What would get you out of a trade if it wasn't working?
Price breakouts are a tricky stop area, because so many times in classical technical analysis, you can have a breakout from a chart formation, but then it will still come down and retest the area of the breakout. and perhaps even just poke below it just a little bit. So I don't find that necessarily to be a useful stop. A much better stop is to put a stop in at the low of the range expansion bar. So you can see where I have that arrow drawn. Okay, if you were able to get in either on that bar or on the close or the next day, I would keep my risk point at the stop of that of that big bar up, because that's where you really had that supply demand shift. And so we want to, once you have that supply demand imbalance there and that shift, then I try to put the stop underneath that bar. And in this particular case, it was nice because we hadn't yet taken out the high, but the momentum made new highs. So that's a good rule of thumb.
Okay. There are a couple more questions here. Can I give those to you?
Of course.
One, earlier you were talking about volume. I think it may have been when you were talking about volume early in the day. But the question that came in said, could you please explain what you were looking at on your volume chart?
That's simply a 30-minute chart of the NYSE volume. And if you were to, in your software programs, put in the symbol for the NYSE volume and make it 30-minute, you will see it displayed like that, showing the successive bars or increase or decrease in volume for the day. And then it's really easy to compare this period to previous periods during the week. And naturally, if it's the day before an FOMC meeting, you'll probably see lighter volume. Fridays, unless it's an option expiration, tend to have slightly lighter volume. So I also will compare Mondays to Mondays. It's a really powerful thing if you see excellent volume on a Monday. That's a really nice indicator. Whoops.
Okay. Another question. If you were a fairly risk-averse trader who was unable to watch the market through the trading house, on which of your signals would you most rely?
Well, if you want to trigger, I mean, gaps and, anything that indicates an increase in momentum is always a fine trigger. And of course, if you're not watching the market during the day, you probably are of a much longer holding period. So you would not want to use as much leverage as, say, for example, somebody that was trading intraday. You would want to lower your leverage. And, you always have tools available to you like options or call spreads or put spreads. Those allow you to take advantage of a technical condition without the stress of having too much risk. So those are some options. There's not necessarily one indicator per se. They all have their strengths and weaknesses. New highs, you're entering in later for the trade-off of a little bit more confirmation, but then your risk point can be a little bit greater. Momentum, you can enter in earlier, but then you might have an increase in noise level as well.
Awesome. Another question that came in, and this person must have been thinking on the same lines I was, because I had a similar question for you. Do you incorporate Fibonacci or Elliott wave into your analysis? And I would add Wyckoff as well.
No, I don't include Fibonacci at all. There's nothing statistically significant about it in my book. And same thing, I have a problem with Elliott wave because, you can have some real experts out there in Elliott wave and they'll still come up with different counts and so forth. So too many times, for me at least, a methodology like that allows me to see what I want to see, and I just I have to eliminate that, seeing what I want to see. And the Fibonacci, it's like you throw enough lines up there, it's bound to hit one of them, in my opinion. But there is some value in having something like that. It could be a moving average or a Fibonacci number, or I prefer swing highs and swing lows. And the reason is because they are the most visible chart points. Everybody in the marketplace sees a swing high or a swing low. And the value in having some pivot, if it's a trader's pivot or a fib number or something like that, the main value is that it's really important to have a reference point by which to gauge the current price action. In other words, is the price moving closer to your level or further away? And how fast is it doing? So if you like to use Fibonacci numbers, it can be a very useful tool in helping you judge the tape action, because it's all about relationships in the market. And so you need two data points to express a relationship. Is it moving closer, and how fast, and vice versa?
All right, one final question. This is for me. How important is it to you to use relative strength in your analysis? Like if you're looking at an NVIDIA, is it important to you what's going on with semiconductors relative to the overall market, or is this simply an independent look at an individual stock?
I think relative strength is one of the most valuable tools out there in stock work. And here's my secret to using relative strength. It's very dependent upon your look back period. In other words, if I look at relative strength for the past 5 days versus relative strength for the past 6 months, etc., I'm going to end up with entirely separate universes. So what I like to do is I like to look at the relative strength, at least to the upside, off of cycle lows, or anything that's a significant swing low, such as we had just a couple days ago. And then I want to look, maybe I'll use a 4-day look back period and see which markets are giving me the best relative strength up off of that low. That's one way of doing it. And the second way of doing it is, let's say that swing low made a lower low. Which stocks out there actually made higher lows on that pullback? And a great case of this was back in the beginning of the year when we made that significant bottom down there. There were actually a number of stocks that were still making higher lows on the daily chart at that point, if you can believe it. So those are two ways that I like to use relative strength.
Excellent points. All right, I lied. One more question.
No problem.
Are we in a bear market, or is that behind us?
I don't know how you can call it a bear market. You know, I've seen quite a number of stocks making new highs. And if you looked at the context of that weekly chart, it was indeed a very, very deep flush. But the structure, overall structure, was still on the weekly charts a downswing in an overall uptrend. I don't yet have that pattern of lower highs on that weekly chart. So my monetary conditions have been green light go. We had excellent momentum off the bottom, green light go, and the sentiment readings hit some near historic extremes at that low, so green light go. So I try not to put myself in a box using expressions like bull market or bear market. I know there's a lot of variance among technicians as to what actually qualifies or quantifies rather a bull market or a bear market. And I just don't consider myself to be on that long of a time frame where it's going to be pertinent to me.
Okay, fair enough. Well, it's been a pleasure having you on here. I mean, that was a tremendous presentation. I don't know if you can bring the slide back up for your book, but I definitely think that...
I'd be happy to. Well, you know, the fun thing is, if you go to my website, lindaraschke.net, you can go and read the first chapter of the book. And if it makes you laugh and you get a good chuckle out of it, that's half the point. And the second half is that hopefully I've been able to pass on much of the things that I've learned over 39 years. And I do mention a number of technicians that had influence on me or that shared their secrets with me throughout the book as well as traders. You know, Ned Davis, Dick Arms, just some wonderful giants out there. Mike Epstein was my hero in many regards, as well as tales from the past that sort of has been a dying culture. We don't have that same wealth and richness and culture of this prevailing environment that we had in the 80s and 90s. I mean, everything's very electronic now and broadband, and it's a different type of game in one regards. But the beautiful thing is that the technicals really never change. The market's going up, or it's going down, or it's going sideways, and then there's plenty of opportunity for everybody.
Sounds good. I can say this, that what you do and what you've done with your book kind of fits almost like a glove with what we do here at Market Watchers Live, trying to share a lot of our experiences to try to help others make, or hopefully not make some of the same mistakes we made coming up through, because that is, it's always good to share our lessons, because I think you probably would agree with me. We've all paid our tuition in stock market learning.
Well, I love your program, the things that you were presenting. It looks like you always present new, fresh ideas, and that's what makes it fun, is sharing amongst ourselves interesting little tidbits or tricks or new stocks to look at. So thank you as well.
Yep, thank you so much for coming on. We really appreciate it, and we'd love to have you back if you have some time in the future.
Absolutely.
Excellent.
All right. Excellent presentation. Very, very good. Okay, Erin, you want to jump into the 10 and 10? Actually, we probably ought to just jump right into the first chart. What do you think?
I think you're right. I'll just tell you that technology and healthcare, which honestly are the leading sectors today, had a lot of requests. So we'll be looking at some of those for sure. But we'll start off with Gilead, which of course is in that healthcare space.
Okay, let me go ahead and pull up Gilead. Gilead's been strengthening here over the last week, but I'm having a little bit of a problem with it because you can see the relative strength versus the biotechs have been so weak. So I think this gets back a little bit to what Linda was talking about and what a lot of the guests that we have on here at Market Watchers Live talk about. And I thought it was a really good point that Linda made in terms of relative strength, going back and looking at key pivotal moments in the market and then comparing what an industry group or a stock has been doing since then. And when you start to see relative strength from those points, I think that can be a great sign. Well, when you look at something like Gilead off of the December low, which obviously was pretty important, you can see we've had a pretty good bounce from the lows on the biotechs, but not so much on Gilead. And that's what's causing this continual downtrend in relative strength, or in this case, relative weakness. So if I was looking in biotechs, I would look elsewhere, to be honest. I'm not a fan here of Gilead.
All righty. The most popular in the chat room is NVIDIA.
All right. Well, we just got an interpretation of NVIDIA by Linda, and I'll give you mine. I definitely think things are improving. I completely agree. You can see on the daily chart, the PPO now is above the center line and has been for about a month. So, and it's in a group that has been much stronger in the semi space. So I don't think it's been one of the better stocks, but volume's picking up and it is beginning to show relative strength here this week, which I think is at least a good start. So I think that the breakout above the recent highs is one positive. You can see today's action with big volume clearing the two reaction highs so far in 2019. I also think that there is some overhead resistance to watch from the huge gap down that we saw in November and then this reaction high. So I believe 175 is going to be a key area on NVIDIA, but if we break above it, given the increasing relative strength in the semiconductors, NVIDIA is one maybe to start to consider on a next breakout.
All righty, let's see. The next one I'm going to give you is ACB.
Right, ACB, nice breakout here too. I really like this move up. All of this sideways consolidation. I could probably draw in a nice little ascending triangle. But first, let me just put the overhead resistance in so you can see the equal highs, and the ascending triangle would come in on the rising lows. So you can kind of maybe draw something like that. But you can see the uptrend in play from the lows, equal highs, and the breakout. And I like to see confirming volume. I don't think there's any doubt that we have confirming volume here. Now, the stock, unfortunately, is already about 10% above the breakout price. So unless you want to take on a little bit more risk jumping at the current price, I would wait and see if you can get it down closer to maybe 8 to 8.25. I think that would represent a better reward to risk entry on a nice breakout here on ACB.
All right. From the medical equipment industry, how about MSON, Misonics?
All right, I'm going to put this one up on the relative chart because I like the group. And so if I like the group, I'm going to probably like the stock a lot better. We did get up and test the overhead resistance. And here you can see, even though healthcare hasn't been great in 2019, medical equipment stocks continue to strengthen relative to the S&P 500. So this is definitely a group that gets my attention. If I see stocks that I like in the group, I'm going to be more interested because I know that we have this nice relative strength in play. Now, as far as MSON goes, you can see that the strength in the group has helped it outperform the S&P 500, and it actually has been a pretty good performer relative to its peers, although you can see that relative high back several months ago has not yet been pierced, so we do need to get that. And then finally, the big price resistance area, you can see back in August on heavy volume, we failed at about 21.5. That's exactly where we just failed at the end of February. So I like this trend line. I think this pullback is an opportunity. One thing I don't like about the chart, and that's the volume on it. I am a volume person. I do like liquidity in the stocks that I trade. And when you look at this one, I think you can see the volume. Today's volume, by the way, 8,000 shares. So that is the one thing, and probably that is the reason I wouldn't trade it. But technically, I think all the patterns are in play. And I still think it looks good. I'm just a little concerned about the volume.
All righty, let's see the next one I have for you from the financial space, Bank of America, BAC.
Perfect bounce off of recent lows. I like that, and it's trying to make a breakout. It's at the top of its range now. Again, Bank of America is just in a group that is not being supported right now on Wall Street. The banks, because of the shrinking yield spread, and it just hasn't been going anywhere. I think the banks overall just are not getting their fair share of the money. But when you look at Bank of America relative to the banks, you have one of the stronger banks. So I like Bank of America. I would probably be a seller where it is right now, only because we have struggled right here at this resistance area around 29.50, and the stock's trading 29.47. But I think off of the uptrend, it's sideways consolidating. I expect we're going to get a breakout. But we are against resistance. Short-term trader, I'd be a seller. Longer-term swing or position trader, maybe buy and holder, I'm fine with Bank of America. I think it goes higher.
All right, our only energy sector request, Enphase Energy, ENPH.
All right, this is one of the best stocks in the market in 2019. This has been a great performer, continues to move up. If there's one concern, it's hitting resistance, and you can see the volume has been dwindling. So my guess is we probably have an issue with momentum slowing, but the overall group, renewable energy, is starting to pick up steam on a relative basis. I want you to take a look here at the gap up here, the heavier volume, and look where we pulled back right to the 20-day moving average in gap support and price support. So I think that is a key short-term support area. I think 950 or so is your resistance, and that's the trading range we're in for now.
Okay. We always joke about it before the show, but how about Costco, Tom?
I'm a fan of Costco. I like to shop there. I don't really like to shop too many places, but I actually like Costco. They came out with their earnings last week. I think it was last Thursday night. Gapped up with those earnings and continuing to push to the upside. I think that they came up short on one. I don't remember if it was, I think it was their revenue that they came up just a little bit short. I think they beat on their bottom line, but the market really likes what they heard from Costco, and we are starting to see some nice relative strength. I would just be a little afraid as we got closer to that top back in September. Off of this move, we're going to be very overbought. So I think if you start getting above 240, I would be thinking about short-term profit taking.
All righty. Let's see. Consumer discretionary, overstock.com, OSTK.
Yeah, Overstock also been trending pretty nicely, but this is one that I think is a bit misleading, because when you look at the specialty retailers, and again, we can look at this as the key tops in specialty retailers. We're right up there trying to challenge these highs. Look at Overstock at the same time, way below where the group has been. So yes, we've been rallying, but it's been more of a case of a rising tide lifts all boats kind of a scenario. So the relative strength here has still been lacking. And I think I would probably look for a breakout in relative strength versus my peers, which I think would be up around this level. You probably could do this versus the S&P 500. The group has not been bad. It's just been overstock. And maybe the thing that throws me off on this one quite a bit is look at the volume that's been coming in on this move to the upside. So ordinarily, I would say, hey, there's some accumulation taking place. It's a good-looking stock. But why is it not outperforming the other stocks within its space? So I think you did a segment recently, things that make you go, something like that.
Yes.
That would be one of the things that make me go, why are we getting all this volume and the stock's not performing with the rest of the group?
Yep. I think that is something to go, How about why? Why?
Why? That's something you're not supposed to ask in technical analysis. You know that, right?
Of course, because we always know, right?
Right. The charts, you just follow the charts. What's the current price? Blah, blah, blah. We don't get into these why questions. But this is a why stock. So let's take a look. I like the volume that came in on this push to the upside, and I really like the relative strength here of the group software relative to the S&P 500. When you're in a group that's performing well, that always helps, and we're beginning to see a little bit of relative strength here in YY. You can see it breaking out to a multi-month high just recently. You can see same thing relative to the S&P. This was relative to the software. So yeah, it's been scraping the bottom of the relative barrel in software, but it's starting to show signs, and the volume supports it with its earnings. Went back, hit that 20-day, and is now trying to get a breakout. I would either wait on this breakout, and I think you've got a little overhead resistance here between about 82 and 86, or another test of that rising 20-day, which has been holding. That's where your best reward to risk entry lies, in my opinion.
All right, and our final one from telecom equipment, Ericsson Telephone Company, Eric.
All right, Eric, consolidating sideways, part of the telecommunications equipment group, which I really like. I won't annotate the relative strength, but I'll show it to you here in just a second. Let's see if I can. There we go. So you can see that 950 has been a key area of resistance. And then I think if we kind of go along this line here, you can get an idea that we've got a pretty nice little uptrend that it has been running here. But look at the group. The group's breaking out relative to its peers. It's holding that prior low. I'd like to make sure that holds. Relative to the S&P, it's holding that last low. And the group relative to the S&P is very strong. So hey. I think this has got a good shot at a breakout. I would be watching 950 on a breakout.
Could you show the chart again? We accidentally went to our summary slide a little early.
All right. Here you go. So here is Ericsson. There's your resistance area. Here's your uptrend. And this was the relative strength I was talking about. I want to hold these relative lows. But this is a group that's been very strong relative to the S&P. So you're in a good stock, in a good space. Volume trends have been good. I think we're going to get the breakout on Ericsson.
All righty. And that does conclude the 10 and 10. Here are the symbols that we did just go over. I'll have those up in the Market Watchers Live chart list after the show. Just go to the Market Watchers Live blog, and the link will be right there at the top. All right, time for our final market update. Let's see what is going on. It does look like we may have hit a little bit of resistance right now in the markets. We hit our intraday highs here for the Dow, S&P, and the NASDAQ. You can also see that following along is the S&P 400, as well as the Russell 2000. But let's face it, it's a pretty good day out there. We've got the NASDAQ up almost 1% right now, as well as the S&P. Hard to beat that. And as you go and look at the summary of the sectors, notice everybody's in green. So all of the sectors are up right now. Certainly a good day in the market currently. I'm going to pass it back to you, Tom, and we'll get ready for anatomy of a trade.
Sounds good. Here, the S&P 500. This is the one chart that I am looking at today. I think this is really important technically. We've seen the S&P 500 bounce back. And on this bounce back, you can see these prior reaction highs that I talked about. October, November, and then again last week. 28, 16, 94 was the highest intraday move. Today we hit 28.1849. Now we could go back and close near the low of the day today, and if we did, I think that short term is problematic. But if we break above it, I think we're going to make a run for the highs, the all-time highs that we saw back in the 2950 area. So I think this is a big day on the S&P. We've had a great week. And since that bad jobs report on Friday where we had the reversal, we've seen really almost nothing but buying. So can we get through that 28.17 area on the close today? I think that's the biggest question as we go into the afternoon session.
All right. Time for anatomy of a trade. I guess I will go first. You know, I hadn't been trading much at the beginning of the year, but I had dipped my toes in the water. So I'm going to just show you some of the trades that I have made or mostly are still in. So I'm going to start with AYX. This was one, I think I used it. It was a momentum sleeper or something like that on the show. And I liked it so much, I went ahead and got it. Of course, hasn't done that much because I bought it back here. You know, let's see, I bought it at 74.24, and of course it is up right now, but I hate taking a down hit like that. But my stop was down here at about 64. So I never hit the stop. So I stuck it out, and right now we're seeing the PMO turning back up and moving toward its signal line. But I have to say, looking at the weekly chart, I am starting to pay a little closer attention right now, and that would be because we're starting to see the PMO turn down on that weekly chart. And when I got in, it was still rising. We are still looking at higher prices going on here, but I know if I annotate it, more than likely what we're looking at here is a rising wedge. So I want to watch that and make sure that we can continue on this uptrend. I think honestly, if we get to about $80, I will probably go ahead and sell just because of the setup of the PMO on the weekly chart. And, you know, I am an intermediate term trader, so I do pay a lot of attention to the weekly chart once I'm in. A lot of times I'll use the daily to get in, and then I use the weekly to sort of follow up. And I know somebody did have that question for Linda, you know, if you can't watch it every day, all day. You know, when I started trading, I didn't watch it all day, every day. Most of the work I did was after the close when all of my indicators went final. So, and I was a mom, so I didn't have an opportunity necessarily to watch every day. And that really molded me into an intermediate term trader. So let's look at a couple others. Barrick Gold. This one I sold, and I really honestly am kind of kicking myself. I might get back in it. I do know, of course, we did see a hold to a buy upgrade on GOLD, Barrick Gold. But what I'm looking at here, and this is the weekly chart, is a reverse head and shoulders. And, you know, this side is getting kind of, you know, hanging in there a little long as far as a left shoulder goes. We haven't gotten that breakout, but you know what? If we get that breakout, I will likely be there at $14. The PMO is starting to pick up speed. I like to see that. So, I would like, obviously, once you get above 14, if it is a reverse head and shoulders, then my target is about the length of the pattern. And I'd say what, another two, probably up here toward $20 for the next overhead resistance area. You can see it's held pretty tightly previously. So I think that one's looking good, but I did end up getting in, getting out. I think I made a little tiny profit on it, but I just didn't like the fact that it was continuing to, you know, move mostly sideways. I just wasn't getting enough action out of it. And again, most of these you will probably notice are in the more conservative defensive groups, because I have been very bearish. And of course, a lot of people are like, are you turning bullish yet? And I have to say, you know, when I look at my monthly chart for the S&P, that PMO sell signal is what's really had me concerned. We're starting to finally see a little bit of deceleration on that monthly PMO. So, you know, I've got to get more bullish. I have to watch the charts and really go with what they say. It's not a matter of what you know, my opinion. I really want to base everything on what I'm seeing on the charts. All right, so IEO is an iShares. I wanted to actually, at the time, get into USO. I'm pretty glad I didn't at the time. The timing wouldn't have been very good. So I ended up going with an iShares industry group ETF. And, it's really not doing that much for me. But I do see on this weekly chart, the PMO is still rising and we're just about ready to get that buy signal. You could maybe even make a case for a flag here. It's an awful large flag formation here as far as the flag itself. But, my stop is way down here at like 50. So I am going to either, stick it out a little bit longer. Maybe if it hits that 52.50 area, I'll reevaluate. But I still think based on this weekly chart, I might get some action out of this area of the market. So I am still there. Kimberly-Clark, and I'm sure, Tom, you might remember when I decided to buy it. I am still in it. It hasn't done a huge amount of good things for me, but look at this weekly chart. I really like it. I think that we should at least get to that overhead resistance area. And if you look at this ascending triangle, and it's pretty much right on as far as the pattern goes. And so what you would expect, of course, is a breakout to the upside. We had some failed breakouts here, but now we're making that breakout again. And for the week, we're currently up 2.25%, which I like. And the PMO is still doing its thing. It's doing what I want it to do. If the pattern were to fulfill, I don't know if I'm going to be this bullish or optimistic, but if the pattern fulfilled, you would look at the back end of it, and that would give you your upside target. And so that would be certainly well above those tops that we have there. And then finally, XLU, which is my most successful trade. I have been loving this one. It's definitely making my bad choices a lot less painful. I got in back here at the end of January. I think this was one of the ones that I put my feet in first with, besides Barrick Gold. I purchased those almost at the same time. And clearly XLU has done the right thing. It's continuing higher. It's in a rising trend. I'm going to start keeping a close eye on it, though, because it's starting to look a little bit on the parabolic side. And so I want to keep that in mind. Right now, I had to move my stop. I would go just below this area of support from the top here back in December. I would go ahead and wait until it came down, maybe even to the 50-day EMA. Again, it's a long-term or more long-term trade. And looking at that weekly chart, you can see that the weekly chart PMO looks great. It just went above its previous top. So I think this one I'm going to be sticking this one out quite a while. I think that this space is still doing quite well. So those were my anatomies of a trade. How has your portfolio been doing?
All right, I'm going to go through these pretty quick, but these are the first three I want to go over are trades that actually I just got out of. One is 1-800-Flowers. All of these stocks, by the way, come off of my strong earnings chart list, which I like, and I just wait for setups. Actually, 1-800-Flowers I traded twice, but the last time I traded was on this pullback to test that rising 20-day moving average. Literally got in at, I think it was around 1740 or so. And yesterday, look at the volume going down as it went up and hit the overhead resistance level. I know that this wasn't a huge percentage win, but to get a stock to go up about $1 on a $17 stock in 2 trading days, to me, that's plenty, especially when I'm thinking that the odds are that we're going to get a pullback. I actually really like this stock, and I'm hoping it continues to sell off a little bit because I'd like to see it again back down closer to that 1750 area. But I think FLWS is one that certainly was a good trade. GoDaddy, GDDY, you can see the gap up with earnings, pulled back. This was the one that was in my blog on Monday. Had a nice reversal at gap support on Friday of last week, and you can see making its move up. Sometimes I don't like holding these stocks through the show because I don't really know what's going to happen while I'm on the air for the hour and a half and prep time and so forth. So I actually sold this one earlier just because it had made a pretty nice move already off of the low, and it was within probably about $1.25 at the time of hitting that overhead resistance near 77. So that was the second one. VMware, this was a really nice one after earnings. The stock had come down, hit its 20-day moving average, posted great results. I was actually watching to make sure we didn't have any closes below the 20-day. As you can see, as you go back the last couple of months in 2019, we haven't had any closes below the 20-day. We had 2 opens just beneath. We came back up, ran up to about that 178 area. I got out earlier. Actually, I think it was about the same price as it is right now. I think it was 177.52 or something like that. But I went ahead and took that profit because we were up against resistance, figuring if it pulls back, I don't want to ride it back down. It also enables me to build some cash so that if I find other stocks that I like, I then have the cash available. Now, these are 3 that I have. I'll go through real quickly. NSP, this was my setup for this week. Big gap up. It came back down. We printed a nice little hammer on Friday. Stock has been moving up. My target is up in the low 130s. We'll see. Kind of play it by ear. Dine Brands, really love this candle today so far, right off gap support. Went down. Actually, I did not get it at the low because I believe the low was 20 cents above the actual gap. So I actually got it probably about 75 cents off of the low because I was waiting for it to get down low. And anyway, it does look pretty good, though, now trying to put in this reversal. Target would be all the way back up near 100. And then the last one, Foot Locker, after gapping up 88 bucks. After that candle printed, I talked about this one likely going back down somewhere in the 59 to 61 area. Well, we got back down there. Yesterday's candle I thought looked really good. I got in probably at about the current price. I might have gotten in just a tad higher. But I think Foot Locker here looks pretty good. So let's go ahead and summarize the anatomy of a trade and take a look at some of the stocks that Erin and I just looked at. And then we will move into the final poll. We have a poll on the FANG stocks.
Yes. And I definitely had a choice to make. I had no problem selecting the one I selected.
I like a few of them. So which one did you go with?
Apple. I think Apple looks fantastic right now.
I actually like Google better than Apple. I like them both, but I like Google better because I like the internet space better than computer hardware. But Google made the breakout above 1180. Beautiful bounce off of the 20-day. When we had that big move below the 20-day moving average on Friday, Google held its 20-day moving average. And I think that gets back to the point that Linda Raschke was making earlier about, maybe points in time. It depends on your perspective about relative strength. I thought Google was really performing well here during that period of weakness last week and came roaring right back. So I actually think Google looks better than Apple, but I like both of them. I think Apple has certainly turned the corner. Still waiting on Amazon and Netflix and Facebook because it is in that internet space. I'm watching it. It's trying to make a breakout today, but I think Google looks a lot better in that space than Facebook.
Yeah, Apple, it's just breaking out. So I really like that out of a consolidation phase. Just went over the 200-day EMA. I even got a bull kiss on the PMO. So I'm liking Apple a lot right now. I might actually go and add that one to my portfolio.
Well, I'm going to show the weekly charts here. First, I'll start with Alphabet, Google. And this is a longer-term weekly chart. We did hold on to that prior support back in the first quarter of 2018. And now we're breaking back up above both the 20 and the 50-week moving averages. And the weekly PPO has gone positive again. Not seeing that on a lot of stocks still. But with Apple, the one thing I had a problem with is it's still hovering below its 50-week. And look at its PPO. It's strengthening, but it's strengthening on the negative side of 0. So I think it goes higher, and I do think eventually it breaks to the upside. I just think Google, in my view, I think Google looks a little bit better technically.
Oh, there you go.
But they were the 2 top picks, and I do agree that they were the 2 best looking.
Oh, absolutely.
All right. Well, we got our upcoming schedule, as you can see on your screen. I do want to thank Linda Raschke for stopping by. I thought her presentation was really good today. Can't wait to have her back on here again. Definitely check out her book if you didn't already. Go back and take a look at the recording later. You can get the information. Again, thanks to all of you for being with us today. Please remember to complete the survey as you exit. As a quick reminder, Market Watchers Live airs 5 days a week, Mondays through Fridays from noon to 1:30 p.m. Eastern Standard Time. Have a great Wednesday afternoon, everybody. Let's see how we close today on the S&P, and we'll see you back here tomorrow. Happy trading.